Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors are looking well past the current troubles, trusting the new direction will be better than the old direction. Everyone from Wall Street to the progressive left of the Democrats is applauding Joe Biden's reported choice of Janet Yellen as Treasury Secretary. There's been a noticeable impact in most financial markets. But ahead of their important Thanksgiving retail season, the American retail impulse is flatlining. Redbook data shows last week was a tad softer than the same week a month ago. And that is mirrored by the US Conference Board Consumer Sentiment Survey, which dipped in early November in a period that straddled the election and its chaotic aftermath. Consumers are less optimistic about their short-term prospects, and that doesn't bode well for holiday retail levels. And this confidence fall came as American house prices rose at a faster rate. In China, their bond debt crisis has been described as historic. The spotlight is on more SOEs at risk, and worse, accusations are flying that some of these companies have deliberately breached their bond covenants. While shipping capacity is tight and freight rates are rising ahead of deliveries for the end-of-year holiday retailing, more Chinese companies are complaining about the impact of the high yuan and noticing a sharp fall-off in orders, especially from European clients. Not only is demand lower, some are shifting orders to other Asian countries. In India, they're making a second strike on Chinese interests, clamping down for a second time on Chinese digital offerings in the country. And in Australia, their October merchandise trade surplus rose to $4.8 billion. And in Victoria, their state government is cutting stamp duty and will borrow and spend close to $50 billion on other concessions, subsidies and projects in a bid to get hundreds of thousands of people back into work and breathe new life into the state's economy that's been battered by the pandemic. The US Treasury 10-year yield will start today up 3 basis points at 0.89%, and the price of gold has fallen again today, down another $33 to $1,804 an ounce. But oil prices are higher again today, up strongly by another $2 to be just on $45 a barrel in the US, while the international price is now just on $48 a barrel. And the Kiwi dollar has risen firmly to 69.7 US cents this morning, and again, since this time yesterday, of more than half a cent. Against the Australian dollar, we're holding at 94.9 Australian cents, and against the euro, we're firm at 58.7 euro cents. That means our trade-weighted index will start today up at 72.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.